Hey everybody, welcome and welcome back to my channel. In this video, I'm going to recap an amazing options day trade I made on the stock Roku where I was able to capture 300% profit in just the first 5 minutes of market open. But it's not about the trade itself. I want to share with you my strategy, thought process, and why I was particularly watching this name in the first place. By the end of the video, you'll have a clear understanding of the system I use, which you can take and implement to see success in your own trading. So let's get into it. Alright, so why was I watching Roku in the first place? Well, that's because I follow a 4-pillar system which helps me identify trade opportunities, form a thesis, and manage the trade itself. Now, these are the 4 pillars I use. It's nothing too complicated, but for now we're only going to be focusing on the first 2 pillars because that's what tells us whether or not a stock is in play. The first 2 are trend analysis and candle analysis. Trend analysis is what helps us identify the market cycle because markets are always doing one of 2 things, right? We're either trending or we're ranging. Simple as that. You want to be trading stocks that are either putting in clear higher highs and higher lows if you're going long, or lower highs and lower lows if you're going short. What you don't want to do is you don't want to be trading stocks that are stuck in a range because in the range there's two-sided trading which makes everything very unpredictable. You only want to be trading when there's a current price bias and then take the with trend setups to increase your probability. Second is candle analysis, and here's where I'm looking for very specific candle formations which can help me predict future price action. And this is actually what really helps us identify whether or not there's an opportunity in the chart we're looking at. So let's break these 2 pillars down on Roku's chart, starting with trend analysis. And here's something I want to show you guys on the weekly chart. I believe since July of 2021 on Roku, we've been getting absolutely destroyed, right? We've been putting in very strong lower lows and lower highs. We're in a very clear downtrend and we haven't broken past the lower high in almost 2 years until look what's been happening this year. So in November of 2022, we put in this lower high, right? And this became a confirmed lower high once we put in this lower low. And then this year, we started by rallying up. And we didn't only rally up, for the first time in almost 2 years. Look what happened. We put in a higher high. We broke past November's lower high, put in this higher high, and now we're attempting to put in a higher low. So right now, this is a potential higher low. This becomes a confirmed higher low if we're able to take out February's high, right? So let's look at the context of this. For the first time in 2 years, we put in a higher high. We're attempting to put in a potential higher low on the weekly chart. If we go to the daily chart, these past couple days, we've been going parabolic. Now what this tells me is bulls are very eager to take out February's high to flip this thing into a weekly uptrend, right? So okay, what this tells us is the chart is in play for longs if we can identify some type of price action opportunity to go long. And here's where the second pillar of candle analysis comes in. So what am I looking for regarding candle analysis? For candle analysis, the most common thing I look for is this right here. 3-bar plays. Now, why am I specifically looking for 3-bar plays? Why do these work so well? Well, first let's go over what a 3-bar play is. 3-bar plays are essentially when you have a big move up, so big bull bar, followed by an inside bar, so some consolidation, and then a continuation bar to the upside or to the downside. Depends on what you're looking at. Now, why do these work? Well, think about it. What is this on a smaller time frame? You have a big move up, you have some consolidation, and then you have a continuation. This is a classic definition of a bull flag or a bear flag if you're looking at the opposite direction. Now, why am I looking for these specific patterns on a larger time frame? Why don't I just look for flag patterns on a smaller time frame, which would not be visible? Well, this is because when you have patterns like this, you're giving the same story to the higher time frame players. So higher time frame players are on your side all of a sudden. And these higher time frame players is what creates those explosive moves on the smaller time frames, which happens to work very well with options if you're able to structure your trade correctly. And obviously, I forgot to go over what we're currently seeing on the Roku chart. So on Thursday or Friday morning, this is exactly what I saw before the name opened. We have this big move up, right? We have big bull bars, big move up. On Thursday, we formed an inside bar, so we're consolidating. This is essentially a bull flag on the smaller time frame. In the pre-market, we also gapped up a bit, so that adds to the bullish thesis. And what I'm looking for is if we could break above this inside bar's high, we're probably going to get a move up to at least to our next level. So let's actually go over how to plot these levels for our system, which is the third pillar of our strategy. And we use these levels to determine our trade thesis. And that's because the way we use levels is very different from a traditional sense on how most people use levels. Because our levels are very reactive off of price action, which kind of falls within our pillar 4. Right? So the questions you have to be asking yourself with these levels is, where is price opening? Are we opening above a level? Are we opening below a level? Are we gapping above or below a certain level? Is the trade worth taking? Is the risk to reward there to hold to a next level? Does the level fall within the stock's ATR? These are all different type of things you have to be asking yourself as you're developing your trade thesis. So before we get into that, I'll quickly show you how to plot these levels. And I first want to give credit to Eric from Major League Tradings for being the creator of these levels. And I also want to give credit to Rake Trades, which is who I learned this system from. So how do we plot these levels? Well, first, foremost, these levels are derived out of the hourly chart. Okay, so make sure you're on the hourly chart, and also make sure that you don't have extended trading hours turned on. Make sure you're on the regular trading hours, because that's where majority of the trading volume takes place. That's the only price action we want to focus on. So how are these levels plotted? Well, it's actually very simple. We're basically plotting trend changes on the hourly chart. It's just that simple. So for example, we have this big move up here, right? We have green bars moving up, and look at this. We put in our first red bar, and then we have a move down. This, by definition, is a trend change on the hourly chart. And the second thing is, you want to be focusing on the opening print only. So for example, this move up here, we focus on the trend change at the opening print, right? So if it's green to red, you've plotted at the opening print of the red bar. Here we have a move down. We have a move down, right? And here we have a trend change, so from green to red, right? We move higher here. This is a trend change as well, and we focus on the opening print. So on the red to green, we focus on the green bar's opening print. Here we have another level, technically. It's a smaller level. So we go from green to red here, and we focus on the opening print. So again, we plot one here. Obviously, there's another level here, but because the trend here, the small trend here on the hourly chart, originated from here, and we don't tend to plot these levels just because that's too much noise. We only want to plot where the trend change originated from. So we don't plot this one because it originated from here, right? So the other two levels, I'll just quickly go over. The other two levels I was watching on this day, the other two I had on my chart was this red to green flip here, and this green to red flip here. And as you can see, if we flip to the intraday chart, these levels are pretty damn accurate, right? And the reason why, my theory of why these levels are accurate is because we're combining support and resistance with supply and demand zones. That's essentially what these levels do, in my opinion. So I'm going to actually continue this video with the recording I made on the Friday when I actually took the trade. That's because I already recorded this video before, but the original intro got corrupted. So I'm just going to continue from there. So if we go down, now that if we look at it in this way, we can see in the pre-market, we've been gapping up just a little bit from yesterday's close. So my thesis right away, well, when it was over here, my thesis was if we could retest 69.75 and bounce back up and go over the opening print, that's when I'll be looking for calls. In this case, we went even higher and did that same thing on the 70.53 level. So if we open the 2-minute chart, I like to use the 2-minute chart for entries. Here, when we opened, we had a very, very small spike down. So we opened here, we ended up opening above 70.53, which is even more bullish than what I was anticipating. We had a spike down in the first couple 30 seconds of the day. We had a spike down, and then we got above the opening print. As soon as we got above the opening print, this is where I entered with my calls, and I'll show you my orders. Switching to the other screen. So these were my orders for the day. My first position was at 6:30.23 at 62 cents per contract, right? And yeah, from there it's very, very simple. I just ended up selling as we were pushing up because it was such a violent push up that I just had to take some profits off, right? Because look at the average true range. The average true range of yesterday, this is an exception, it's a big trend day, but like the average day, we're maybe moving, we're only moving like about this much, right? Right? So when we make that move in the first couple minutes of the day, I just like to take some profits off because we're having a huge IV spike. Those contracts are pumping up like crazy. So I ended up taking my first position off at this first 2 minute candle right here. So that was an 89% profit that I locked in right away. Then we just, no hesitation, we just keep on moving up. And let's just switch to a minute chart to get a better idea of where I exited. So the second one I exited at almost at the 33. So already 3 minutes into the day. Over here, let's switch to my other screen. I locked it in at 170. So my second contract I took off at 175% profit. And just so we're already here, 245 is where I took off my last third of the contracts at 293%, 296%. So I ended up basically top ticking this last bar over here because we're close enough to my profit target. We're already way past the stock's ATR, and sure, we could continue up, but why would I risk all of these profits just to make an extra like what, 60 cents? That doesn't make any sense, right? So this was essentially the trade. These ones they happen quite rarely, but once they hit, man, they hit. This is insane. This is also a possible re-entry opportunity here. If you ended up holding, obviously it did hit my level down to a T. Now that I'm recording this video, I believe that would be let's check. Yeah, so if I would have kept holding, I would be up 375%. But again, it doesn't make any sense to risk all of these profits, right? Because we make a big bull bar on the 5-minute chart, and we don't get much follow through on the next bar. So that already tells me that like I should be wary of this position. Obviously, we're in a strong uptrend, but we could easily pull back to the 20 EMA. So it's just not worth risking all of these profits just to make a couple 60 cents. So even this trade over here, this is a possible high 1 buy setup. Actually, it's a high 2, high 1, high 2. This is a possible buy setup. I was even looking at it, but your risk to reward here is not much. It's like it's only a little bit past 1-to-1, right? It's 1.1 R. It's not worth your time to take these type of trades. Sure, if the level was maybe all the way up here and make it a 2-to-1 or 3-to-1, then yes, this is a perfect entry opportunity. But even then, like I wouldn't take this. But again, if you did end up holding this, you have to wait for some structure to form, and that's when you move your stop up. So if you believe it's going to keep going up, but we're already at the stock's ATR, so I doubt it. But if we were to keep going up, this is where you trail your stop. So right now, we're also putting in a potential higher low right now. If this becomes a higher high, you could easily move your stop up here. But until this candle doesn't move to a higher high, you shouldn't be raising your stop because that's not the appropriate way to trade. So this was a quick trade breakdown. Very, very nice day. Moved exactly how I wanted to. I was actually watching many names in the open because all of these were pretty good trade opportunities. Like Nvidia, I was also looking at this spike below 389.35. But as soon as Roku, as soon as I entered Roku, I just stopped watching all other charts. Right. So yeah, very, very good day overall. I probably could have. I guess I probably could have held a bit longer, at least on my first exit, because we didn't actually get up to the full ATR on my first exit. So I believe my second exit was justified just to take some profits off the table because of the high IV move. But yeah, I believe I didn't make a mistake exiting here just because we closed at the 5-minute bar and we're already way past the ATR. So it's not worth risking all these profits to make an extra couple cents. But so that was a trade for today. If you guys found this helpful, make sure you leave a like on the video and subscribe to my channel for more trade breakdowns. All right. I'll see you guys next time.